going everyone? RoyalFlush here. Welcome to Mirror Management, not financial advice. Any of the stocks or ETFs talked about in this video are not advice to buy, hold, or sell. Do your own research, take some notes, let's have some fun. Alright, so today I want to talk about the last 3 days of trading. Man, it's been a very fun, packed week of events. PPI, CPI data came out, and also Powell talked yesterday. So when it comes to trading, you really want to know the events that happen throughout the week. Especially, you also want to know what they are and when they occur. These events, usually PPI and CPI, are hand in hand. PPI is usually announced first, and then the next day it's usually CPI. Or if it's not the same day, it's usually the same week. So let's see this. PPI was on Tuesday, and also followed by Jerome Powell's speech at 7. So PPI right here was at pre-market. So this is what it says there is a measure of the average change in the prices domestic producers receive for their output. Okay, so it sounds like how much product was produced and the price of it. Okay, and then CPI is how much, it says here, an index that measures a monthly change in prices paid by the US consumers. So it's almost just like, in other words, it is what the US like the average user or what the average US citizen is spending on the regular common goods like gas, food, water, etc. Okay, and of course when Jerome Powell speaks, it makes waves throughout the market. No matter what he says, we must always respect it. Okay, I have the ability to day trade. Okay, so that means if there are these news catalysts going to occur, I kind of just go on without holding any trade overnight. Okay, I play what the opening move provides and tries to present. Okay, when it's CPI, PPI, we have to expect these types of things. Okay, it's gonna be a big gap up or big gap down. There's never gonna be an in between where it's just gonna be flat. Okay, so with that being said, let's go ahead and look at the trades and see what happened throughout the day on those trades. So let's start with Tuesday. As you can see, I always have my yellow line. Those are supply and demand lines, and I keep those unchanged. Those are always drawn on the 1 hour or sometimes even the 4 hour. And if these lines are respected throughout the entirety of the day, it just shows the strength of these lines and that they're not just there for nothing. Okay, as you can see there, like the market started with a really nice pump, but throughout the day it just started to decline and even drop all the way down here. So on May 13th, it looks like I opened up a bear call spread at 848, 4 of them, and I closed them at 1227. Okay, there's a very important part of this. And then I put the order to close at 1049, but it didn't get filled until 1227. Okay, let's go ahead and look at the chart, and we'll see exactly the reason why I kind of lament this. You can see there's a dip there all the way down to the 200 EMA on the 5-minute chart. So that means the market dipped strongly enough to even just test it. I always think of the 200 EMA as like a really strong resistance or support, and in this case it was a really strong support level, because you could even see there that it just wicked and then actually came back up. But the funny thing is I know my bear call spreads, they were actually very much in the money. I think they were already like 50%. Just in case you don't know what a bear call spread is, I will show you how to make it right now. The 443 and 444 spreads. So in order to make that, you go to trade options, and we'll even go based off of this is going to be current market data, so it's not going to be accurate, but this is how you would make it. Bear call spread means that you actually want the stock to stay down below your strikes. Okay, so if I did 444 and 443, it would look something like this. I would buy the 444 and then sell the 443. Okay, don't get confused here. You're not actually buying this and selling this. You actually are playing for the difference of. So since these ones have this doesn't really reflect good data because the price of the shares are really skewed right now. So let's go off of more recent data. Okay, this looks more like it. So I would sell below the call option. Okay, and then so now you have a range here. But this is the max loss is the amount you need as collateral, and the profit amount is the amount you're playing for. So in short, I was playing for an amount that I was happy with, and I didn't even average down. So I had 4 of these at $38. So 4 times whatever 38 is. Let's go see what that is. 38 times 4. Okay, so I'm playing for a total of 152. But what did I close it at? I closed all of them all at the same time for 0.17. Okay. So we take 38 minus 17, and that is the amount we got. Okay. Divide that by 38. So that's a 55% gain. Okay. And then let's also see how much we got in total times 4. $84. Pretty good, right? So that's how we start off the week. Anticipation for news catalysts such as PPI. Okay. Since CPI and PPI had not been announced yet, I feel like there was a lot of anticipation, and so I did not want to hold anything. And you could also just see that the market was respecting this supply zone here at 443 very well. That's the whole reason why, because with this wick here, it really just shows that they pushed up, but it was not strong enough to break this. So always pay attention to the bodies and the wicks of your candles to determine the strength of a move on the day. So on Tuesday at 5:30, PPI was announced, and you could see there it took the market down. This is still trading the triple Qs down to 440. Okay, right well below this zone right here. And so when we turn off the extended hours, because before market opens, I try to get the high of the day and the low of the day, and if those things change throughout the day, we change those highs and lows. So that's why when I turn off the extended hours, it'll look something like this. So, and you can see there, it still shows the 440 as the low. And what's interesting about this though is that even though it's not shown on the chart itself here, it still creates right here, it's trading between what we call the golden zone. All right, I've mentioned this in one of my older videos. The golden zone is literally the middle area between here. It's of the Fibonacci sequence. It's the 38.2 to the 61.8. All right. Usually it's going to trade or at least respect it in some regard, whether it's once it makes from the lowest to the highest. So it's trading in between it for quite a while. And again, it's still respecting. Yesterday, it's actually respecting the prior day's old supply zone, which is now demand zone. And it's now respecting a newer zone right here for a good part of the day. I actually made a bear call spread on this one too, because well, Powell spoke at 7, and so you could tell for a great part of the market day there, up until the last hour, the market was actually pretty flat. So let me look at my play and see how it reflected here in the chart. So I opened up this play at 8 o'clock, 8:06. Okay, so with Powell speaking, his speeches are usually like anywhere from 30 minutes to an hour, and so I was like, all right, I must respect this, and I'm not gonna play anything until he's done speaking. So 8 o'clock, and I went for 5 at 46. Okay, I believe I averaged into this. I believe, yes, I even averaged down on this play. So I bought 2 at 56 and 5 at 46. So let's do some quick math. 2 of them at 56 and 5 of them at 46. I'm playing for a total of $342. When did I close this thing? I closed all of them up. I put in the order for it, actually, it looks like. So I think I learned from the prior day's mistake of not putting it in order so it can get filled at a satisfactory closing price. So I filled it in. It got filled in at 10:05. Okay, for 0.24. So we take this, and since there's 7 contracts, we will actually subtract this. 7 times 0.24. I made $174. All right, that adds up. And we divide this by 342, and that's where we get 51% on this play. So I made $174. Let's go ahead and see the chart and see what happens. So if I'm in on this play from about 8 o'clock to 10 o'clock, let's look at the 8 o'clock to 10 o'clock. You can see here that this zone here, what were my strikes? I did the 445 and 444. So I saw my supply zone here, line, and I wanted to use that as my my guide here. These wicks did not even get close to it, at least during the time of when I was in the play. So I must have, when it was 8 o'clock, I saw this retest here of the higher 444s, and then I wrote it at 8:06, right? So that means I was somewhere like right around here. I got pretty close to 445. But you can see as these wicks are kind of coming, and candles altogether are coming down, we even see a cross there. Okay, this is still one of my main strategies. The EMA crossing with the 9, I'm sorry, we look at the 9, the white line, 9 EMA crossing with the 30 EMA, and then soon with the VWAP. When I see those things cross together, I mean, it's usually a very guaranteed move in the direction that it's crossing down. In this case, it's down. But look at the line here. Yesterday's supply zone is also now demand zone, and also very perfectly acting as support. So now it's a demand zone, and so that means while we did get a down move, we now have a strong support level here that is very much respected for a good part of the 10 o'clock hour. But by this time at 10, I'm already out of the play. The play said I was out by 10:05. Okay, I already collected my 51%, 174 bucks, and then the rest of the day we don't have to worry about it because we're already out of the play. The rest of the day, it cracked. it cracked open from the top. So I don't know what the reason for this rally was, but we could also do another thing. I heavily always suggest that NVIDIA influences the moves on the triple Qs. So we always look at what NVIDIA did that day, and did it act strong on that day. We must always draw the side-by-side comparison, which is why I have this chart here. And so let's just focus in on 8 o'clock to 10 o'clock. And it looks like NVIDIA also was respecting the upper levels here at, what is this price here? At about 914. So it did not get to 914 until past 11 o'clock, right? 11 o'clock on the Qs. Looks like it's starting to rally. So while they have completely different charts, they still share a big similarity. You see the big gap down on the bottom at open, and in this case it went right into open on NVIDIA, and it affected its lines differently. And yet the Qs still followed a similar path, and then when Qs started rallying past 11, so did NVIDIA. Okay? So even though I was in a bearish play, I had already put in my order to sell, or buy to close in this case, and collect my profits at 50%, which I was very happy with. So today was CPI data at open at 5:30, and alright, I did 2 plays today, and let's see here. The first one was actually a losing play. It was a bear call spread. I lost $180 on this, 52%. I opened up one of them, and then I even averaged in once. So I've been giving myself a new rule. If I'm going to average down on something, I'm only going to do it once, and of a lesser quantity than the one I originally got into. So I opened this at 722. I was thinking the market was going to dip because I was very suspicious as to why the market was running up on a day before CPI data. All right. So I mean, though I still opened this with a bit of a bias. See, I even averaged in at 750. I closed it at a loss at 814. So you can see right there immediately on Qs, there was this dip. This red right here was actually where I got in. I got in at what was it, 720? Yeah, I initially started my play at 720. So I was thinking that the VWAP was gonna act as resistance. But later on, I realized there was a really big mistake that I really failed to recognize. And it's funny, it's because it's also one of my main strategies. I immediately noticed that the VWAP was beginning to cross over with the 9 EMA. So I saw that the 9 EMA was crossing with the VWAP, but the 9 EMA was nowhere near to be found to be crossing with the 9 EMA either on both the Qs and NVIDIA. And so this was this should have been a more immediate sign for me to take a smaller loss and flip bias immediately. But I took a bit of a loss. I took a $180 loss. But once I had already accepted that I was willing to commit to the upside, I wrote some new strikes on my bear call spread, or from closing my bear call spread for a new bull put spread. Okay, because Nvidia's move was quite a monstrous one, and as well as SMCI. SMCI also had a crazy move today. If you wanted to look at that, I should actually even update this right here. There you go. This doesn't reflect after hours, but you can still see there, this thing also too had that 9 EMA crossover with the VWAP. This is a very strong move. If there's nothing stopping this from curling down, then we have to expect that for the rest of the day, it's just going to continue running. So when you see types of days like this, this is really a one-sided type of day happening on major tickers like Nvidia and SMCI. I had already closed at a loss, and then I opened up my put credit spread. I accidentally opened up just one here, so I immediately opened up the rest here. So let's look at the averages though, so I can do some quick math. So 1 at 45, 4 at 46, and 1 at 53. So I'm playing for a total of $282, but mind you, I already lost $182 here. We'll calculate the difference between that later. Back to this. And so, funny thing here is, I actually did try to close it. I put in my limit order here to buy to close at 1050, and what it doesn't show here is that like they were only getting picked up very slowly, but it does show that 4 of them filled at 0.04. Okay, so we do take 5 of them. So if we take 5 of these, so this minus 5 at 0.04, or let's see, times 4. Okay, this is the amount that we're closing for profit. Okay, 262, and then minus 5, 257. Okay, we divide that by 282, and that's where we get 91% profit. I did force this one closed just because like it was already so low enough that you know what, I'm not gonna make a big deal over $1. Let's just close this damn thing out. But yeah, it was a very convincing move because I follow Qs so closely. I even have a folder here for top 10 holdings in the triple Qs, and we could probably just look at all of them and just see all of the EMA crossovers. Okay, at open. I'm not going to adjust any of the charts, but we could go ahead and identify it right here. They all happen at the exact same time. 9 EMA crossover on Microsoft, 9 EMA crossover, or sorry, 9 EMA crossover with the VWAP here on Apple. Costco, I know it happened. Right here. Right here. A little bit shortly after 7. AVGO, yes, it did happen right here, a little after 7. So that's why if you follow tickers that are tied with SPY and triple Qs, you must always understand that if one thing happens to one, it's happening in the Qs. And what do you know? I was trading the Qs. There's really one more thing I want to highlight this week. Over the weekend, AMC and GME, there was some hype built up around it. Roaring Kitty was making some tweets about, the gamer leaning forward and stuff, and basically just teasing that he was going to make the stock run up. If you don't know about the whole GME and AMC situation, just do your research. I don't need to say much more about it. But we can go ahead and look at the stock tickers and then see exactly what happened. They went on an amazing run, but this is very short-lived. I think one thing that I really want to point out is that if you got into this game playing, stocks through AMC and GME, that's great. But I've held these stocks at one point, and I was running some of my older covered call strategies on these, even cash secured puts on these. These just, I love these tickers, but they're not like profitable in the end. If you're in on this run, you're probably getting out now, because who knows when this will happen again. There are a lot of people who are talking about this type of deal like years ago, and it was very dormant, and there have been so many stock splits and stuff. But what you really have to understand is that, like, the real thing that sucks about playing these is that they get halted all the time. When this happens here, like when a ticker halts, on top of already being in on a play, now you have to worry about the moneymakers stopping this thing from moving, because people are trying to get in and lose money. Like this is the stuff that like I just knew, and like I've been in on this for so long that I am not surprised by this, and that's why like I can play other tickers and not be surprised that things are just going to be stopped. And feel like I'm gonna lose all the money I put in. Like, do not put yourself through that. It's really not worth the trouble. I get that it's fun to see, tickers and companies we really like, support the little guy, but like, this stock market is not that type of game. If you're gonna be in on this for the long run, and you finally collected your profits from both of these tickers, it's time to start learning, and it's time to start charting. Okay, so I mean, even if you have made money on these tickers, it's great. There's always opportunities in the market. Market gives and takes away every single day, but you're only gonna be a part of it if you know how to play the game. So you can play tickers on the downside, but why bother with tickers that are gonna be stopping you from making good decisions and put added pressure when you're even on my plays on the Qs this entire week. I still felt pressure, but even though some of them were like pretty convincingly one-sided for a good part of the day, I still had to worry. So if you're gonna be doing this for a long run, if you feel like you've gotten to the point where you really want to learn, you should really start doing it now. Okay, so because at the end of this all, I'm just trying to help everyone. I don't show these videos to flaunt the amount of gains, even though I'm going to buy some yen with all my profits this week, but to help each other out and help each other grow. That's the whole reason why I do these videos. And if as long as you give it your effort, you'll learn. Just keep on doing it, and once you find your system that just works for you, then you'll be getting the ball rolling, and maybe you'll be making videos about showing how much you made on the week. So anyways, I hope that was enjoyable for you guys. But anyways, let me know what you guys think. What tickers are you trading into the rest of the week? I'll try to do some more videos throughout the week. I was originally planning on doing daily videos, but I feel like that was too much for me. So maybe I'll do some videos where I trade through Monday and Wednesday, and then see how I do on the trades where I trade Thursday to Friday, because those are actually my days off throughout the week. But anyways, let me know what you guys think in the comments. Like and subscribe if you can. And before you get on out here, if you want to earn it, you're gonna have to learn it. And if you want to get what we desire, gotta jump to the flag. See ya.